MS Industrie AG is a company, an industrial company, now active in the German, European, and global markets since exactly 60 years. So the company was founded in 1965 and has a huge experience in machining of different kinds of metal parts. Here, an overview of the history. As I said, founded in 1965, through various milestones of new customers, new clients, especially starting in the 90s, when the company was appointed to supply companies like Daimler Truck and MAN for special valve train systems. So all these metal parts, machined metal parts and assembled metal parts are delivered to the truck industry. We had steep growth over the years and a new location, which is the main head office and the head location of the company in Trossingen. That's 1 hour south of Stuttgart. A huge manufacturing site. We expanded the shop floor in the year 2023. The last milestone was that we opened an operation in the United States, as I will show with the next slides. So this is the top view of our main site in Trossingen. Here's around about 22,600 square meters. So it's a huge area with more than 180 machines for the manufacturing. We are using a lot of energy from our own photovoltaic system, which is installed on the roof and beside the manufacturing site, and has a capacity for more than 175 million euros in turnover. Presently, we are around 150 million euros in turnover. The next slide shows our smaller setup in the United States. It's North Carolina, very close to the airport of Charlotte, focusing on our US American customers, such as Rolls-Royce and MTU America, where we produce in the same system, with the same machinery, with the same automation, special parts for heavy combustion engines for MTU. But I will show the products right away. So the next slide shows our industries and our sectors where we are delivering our products. The truck industry in Europe is the biggest part. Historically, we came from 100% share in sales for the truck industry. But over the years, and especially through the last 5 years, we diversified quite a lot with products which we're delivering to the construction industry, a lot of off-highway highway products which we deliver. Also for alternative engines, such as battery electric vehicles. The truck business in the US is also part of our customer portfolio, and hybrid cars, a lot of parts which we are producing for the Volkswagen Group, for example, for hybrid cars, are part of the portfolio. If we look forward and if we add up all the contracts which we have with our customers, which usually are 5 to 7 years contracts, the total contract volume which we have is more than 1.1 billion euros. So it's really a long-term oriented business with customer relationships for more than 30 or 40 years. Let's skip to the next page. Since the truck industry is still the most dominant industry for our products, we here can show that we basically are the important supplier for the two biggest platforms in the truck industry, Daimler Truck and the whole Traton Group, with brands like MAN, Navistar, Scania, and Volkswagen do Brasil. Um, the products which we deliver there are basically the complete valve train systems for these heavy engines, for the heavy truck platforms, for the whole world, for these two groups. Two of the five largest international truck delivers are our long-term customers. Apart from the truck industry, you see also logos and names of other companies. For example, the off-road applications for heavy combustion engines by MTU Rolls-Royce Group, or the former MAN Energy Solutions, which is now called Evolens, just as two examples. If we look at the next page, again, since the truck industry is driving our business quite a lot, we permanently monitor the sales, the European sales of the heavy truck registrations. Heavy truck means above 16 tons, because that's our focus. We are not delivering parts to the light and medium weight commercial vehicles. What we have seen is, after the Corona dip, quite a steep increase with the top year 2023, which was, I would say, all-time high over the last 5 years. Since then, we see that the registrations are dropping by -10%, -15%. However, it seems that it will stabilize over the next years, and then coming up again to new growth, because in average, the transport on road worldwide has a +3% per annum trend. Depending on, because it's a capital expenditure business, depending on the capital expenditure cycles of the big customers, of course, we have more volatility in the truck industry as in the passenger car industry. Our objective is to follow the industry, the truck industry, as good as we can, but to focus for new business on more on the side of off-road applications and other industries. Next slide, please. Here is just an example that the products which we deliver, here you can see the whole valve train system, which is on top of the heavy engine of the Daimler Group. This engine goes also into special vehicles for the military, for the German military, and this should just show the example that our products are also part of the defense sector. However, we don't see it directly, because we deliver the parts for the engines, and then Daimler decides which engine goes to which country and into which application. But this was just a recent notice from the German military. We are talking here about 600 pieces. And just to give you an idea, 600 pieces would be for us a production of 1.5 days. Yeah, so it's not a huge order, but it's a part of the extension to other applications. Next slide, please. Yeah, the products is three groups of products. We deliver whole systems, like here on top is shown the valve train system for the heavy engine for the Daimler Truck Group, or very sophisticated aluminum housings, or several parts of components being of steel, forged parts, die-casted parts. To make it clear, we are not die casting or not producing the raw parts. We purchase the raw parts, and then starts our competence to machine and to assemble in a high precision way all these parts at the highest quality level for these heavy duty applications, such as combustion engines, which have to run for 1.5 million of kilometers for each truck. Let's move forward. Here, just an overview of the technical competences. We basically have all the competences in-house which are necessary to finalize the products I have shown. The biggest part is the machining. For the machining, we use 5-axis machining centers from companies like DMG Mori or Chiron. These are the two main suppliers for the heavy stuff. But all the competences listed here need to be done under one roof in order to be a long-term partner for these products. What we did in the past 3 years was a project where we heavily invested into the machinery park. We invested into 30 new machines which have been fully automated and connected via so-called AGVs. It's vehicles which drive without any worker and supply the various machines, bring the parts to the machines, have the machines running, doing the washing process, doing the measuring process, having loops of information. So if the measuring process discovers any failure in tolerance, then an automatic signal is being sent to the machine who did the product. And we have, as a main argument for other sectors like defense or aerospace, we have the full traceability of every single part. So that's the benefit of the full automation process in the manufacturing, that you have really the full traceability, that every single part can be found over the life cycle and where it has been produced and what have been the technical data. The next slide just shows the layout of our main of the manufacturing hall. At this stage, I would normally have a video clip, but this does not work with the PDF version. So just verbally described, as I did before, the highlighted area is the new area with the full automated machine park. This was done on one side due to quality issues, on the other side due to the fact that we heavily significantly reduce personnel cost in this location. Also, other parts of the manufacturing are automated, but this was the most recent development. So overall, if you look past 5 years and if you look forward for 5 years, we are coming from 100% commercial vehicle exposure. And if you look on the top right-hand side, our target is to grow, especially on several other industries, but still keep our very strong position in the powertrain for heavy commercial vehicles of around about 50%. We are now in this process. We basically have done everything which was necessary on the technical side, on the manufacturing side, on the quality side, and on improving the energy supply. Around about 35% of our energy consumption is being produced by us through photovoltaic systems and by 2 own heat and power units. So we are quite partly independent on this cost and looking top down on Germany, apart from the bureaucratic regulations which we have in Europe and in Germany especially. It's personal cost and energy cost. And through the whole project, we have shown that we addressed these 2 issues in order to be a stable and long-term oriented business model in Germany. Yeah, coming to the numbers, I'm speeding up a little bit. If we compare the 3 quarters last year and this year, we have to do a reconciliation, because in the first half year of 2024, we still had another part of the business which we sold, where we sold the majority. So we cannot really compare it. If we look at the comparison for continued operations, revenues are more or less at the same size. EBITDA also, and EBIT the same. So we are somehow at the same level of the first three quarters, compared apples with apples, as we say in Germany. But that, of course, is not our goal. So we have seen that the truck industry is catching up again for the parts which we deliver. And we had a new manufacturing site in the United States, which we kicked off this year. And there have been some run-up cost of around about 1.2 million in the first three quarters, which we had to digest and which are included in these numbers here. Let's look at the quarters. Then the trend is a little bit more clearer. Next page, please. Yeah, looking at the quarters, we can see that from the lowest point, which was end of September last year, we steadily catched up with order entry and orders on hand. The first two quarters have been developing very positively. Q3 and Q4, also due to seasonal effects like the Christmas days, is now going on the same level, more or less. But we are expecting further growth for the next years, which I will show on the next page. Now, just one step in between. Our balance sheet here shows how we are financed. Basically, we have a lot of inventory, receivables, and machinery. So that's what on the asset side is necessary to do our business. But we still have some real estate assets and minority investments which we want to sell and are in the process of selling. So that on the right side of the balance sheet, we see still some financing instruments like the MS bond or bank liabilities, which then, of course, will be reduced significantly once we have sold these non-strategic assets. Next page, please. So the long perspective for the future, and I think this shows a little bit what we will achieve in the next years. The dark green column is shown just booked business. So the dark green column for the next year shows that we are very stable on 150 million plus for the next years for existing products, existing customers. On the top of these columns, we see now the effects of acquisitions, which we are doing, which we did in the last year, which we are doing right now. For example, next year, we will kick off the manufacturing for MTU America at the new site in the United States, which is the light green box on top of the column. And so we plan to have a steady organic growth over the next years, in combination with an increased profitability on EBITDA level due to the high automation which we have now on board and the economies of scale. The area which I show behind is that the liquidity will ramp up, especially after 2027, when we have paid back our bond and when we will have sold the minority investments. And the next message of this chart is that the violet boxes, the heavy CapEx program over the past years now is done, now is over. So it's significantly reducing, and that is the reason why our cash flow will increase steadily. Next page, please. Yeah, the structure of the group is quite simple. On the left-hand side, you see the two operations, Germany and the United States, of the MS X-Tech segment. And on the other side, you see the minority investments which are supposed to be sold over the next years. One sale has already happened in August this year. This was a real estate of a former manufacturing site. And the next boxes will follow over the next years to be sold in order to focus on our strategic asset, MS X-Tech. Yeah, the minority investments here, just as a summary, the most important one is MS Ultrasonic Group, which was formerly founded by us 30 years ago. We have sold it to the Schunk Sonosystems company in Germany in order to bring plastic welding together with metal welding. It was a strategic move. Then we have still a minority investment in an electromotor company and a huge real estate property in the United States, close to Detroit, which is also in the process of selling. Yeah, the share price development is not really positive. If we look at the past 3 years with ups and downs and ups and downs, the main shareholders are in the management board and in the supervisory board. Reto Grazzetti is the biggest single shareholder of our group and is a long-term oriented value investor. And yeah, we are positive that with the next year, especially with the development of the next year and the sale of non-strategic assets, we will be able to step by step see an increasing share price over the next years. Last but not least, a bond which we have issued a couple of years ago. It's around about 9 billion euros, which we issued, which we used for our transformation, which we used for our heavy investment into new automated machinery. The bond will be paid back in October 2027. And yeah, it's a nice instrument and has a coupon of 6.25%. Yeah, so I'm coming to the end of my presentation, and I hope there's still left some time for a couple of questions. Sorry for the technical problems at the beginning. Thank you.
Aufschnaiter, we just have about 30 seconds left, so let's do one last question. I think the most important one. Can you tell us about how much defense exposure you will have in the future?
It's ramping up step by step. We have indirect customers, as I showed with Mercedes, and we have direct customers where where are not allowed to tell the names. We received already direct orders from customers in the defense area. Usually, you receive the first packages of products in order to be tested, to test our capability. And we think that the ramping up of this part of the business should start at 1% of sales, 2% of sales, 3% of sales. So this will be in the first 1 or 2 years, which we foresee right now. But there might come other customers, especially if you have shown the first examples. And so it will not be huge for us, but it will be a steady part of our product portfolio and an interesting part of our product portfolio.
Mr. Aufschnaiter, thank you so much for your time and great presentation.
Thank you very much. Bye-bye.